you know, it's quite clearly what happens. It's buy side above. So it doesn't matter whether you pay 17 evens or 17 ones or 17 twos, it's buy side above. It closes way outside of that area. So you're trying to buy pullbacks, you're trying to buy dips in that period. We have managed to buy into the pullback here at the 6th. We talked about that trade earlier, actually. But we've got a sell on at the moment coming in from the top edges, that sell that we've just talked about, pound yen and etc. in terms of risk. So this is easy. This was just absolutely simple trading. So you can see what's happened to the last 4 days FOMOs. The last 4 days FOMOs, sell side this day, sell side this day, sell side this day, and buy side this day. And look at the swings we've had. The swings that we've had on that trade has been enormous. You could have made your year's money on those 4 days trading. Your year's money on those 4 days trading. The top edge swing was 28s. The final bottom price was 15s. That's a $13,000 per contract drop. $13,000 per contract drop. Even a 5 lot in that's getting you a lifetime's worth of money almost, isn't it? It's giving you that lifetime opportunity to trade for a living by just having 3 days of drop like that. You're not going to see it again, by the way. It's you've missed it. It's gone, right? You're going to be back to winning $500 here and $500 there, and no luck. If you don't have the balls to step into these really fast markets, that's a choice. And sometimes that's a good choice because you're not capable of stepping into the fast markets until you've learned how to trade with speed and with accuracy. And that's okay. You're allowed to do that. The point is, you don't expect this market to last forever. So if you've missed it, just like I said, no luck. It's not being nasty. It's just the reality of it. The chances are that it's going to settle down a little bit for the next few months, and we're going to start winning $100 wins here and $50 wins there and $1,000 wins here and $500 wins there. It's not going to be the same for a few months now that this is going to start settling down. And for some people, that's a great sign. That's a really good sign. And for other people, well, they're going to get really frustrated with this type of market. And you've got to guard against that frustration. It's just the way it should be. The markets are slowing down a little bit. The volatility has came off the table for that, that 90-day period. Right? Deal with it, right? You've got to deal with it. So if you've made your year's money during the last few weeks, congratulations. If you haven't, just recognize that you will not now make your year's money in the next few weeks unless things kick off again, in which case you go back to that and say, well, let's get busy. Because it's going to go a little bit quieter. As I said, sometimes that's a good thing for some people and sometimes it's a bad thing for some other people. You've just got to recognize that that's what it is. Anyway, let's get through the data that we've seen this morning. They've changed the format. They've changed the format a little bit of this calendar, so it's just a case of getting used to it. They've put all these, they've changed the color of your lightning bolts here, Paul, so just so you're not getting confused with these things. Anyway, Chinese inflation numbers very, very, very low, aren't they? Chinese inflation very low, minus 0.1 on the year-on-year inflation in China, minus 0.1. Prior was minus 0.7 to be fair, but still very negative inflation numbers. PPI numbers also under a lot of pressure, minus 2.5%, year on year on PPI numbers. Looking at the storylines, you can see there's been no change to the economic overall risk surveys. You can see that these can have a bit of an impact because your competitiveness in like financial sector and all that kind of stuff is a thing that people pay attention to. So when you see it staying roughly the same, it's pretty much a good sign. Looking at the big US numbers this afternoon, of course, this is the most important thing we've got is this afternoon's big numbers here. Going back to the bond before I get into this, because we're going to be talking obviously a little bit about the auction process. But remember, Mike asked the question, and we had the conversation yesterday about this being a very high probability buy auction. And we said to Mike asked the question about the auction, and my answer to Mike at the time was, well, if this is not a bid auction, we've got real trouble, right? Does everybody remember that conversation? simply because of the size of the concession we had, right? So we were expecting this to be a bid auction, right? We knew that this had a very high probability buy auction component. And the interesting thing is, if you just look at the shape of the curve in the background here, you can see quite clearly that the curve is starting to flatten, isn't it? It's not by much, but it's certainly not steepening. If I look at the relative value of the curves against each other, which is now this pink line, you can see that there is quite clearly a bullish divergence into the auction itself. So as far as I was concerned, this was a no-brainer buy trade. It wasn't just a buy trade, it was a no-brainer buy trade. So, there's not really an excuse for anybody following that conversation with Mike not to have had that long trade at least coming out of this. And sure enough, it turned out to be a good solid demand auction. We got a good solid demand for that. Now, coming into the 30-year auction, it's all going to be dependent upon, of course, what happens to the CPI prints. If the CPI prints come in softer than this expected, you'd imagine that the 30 is also going to be a big buy auction as well, right? If the CPI comes in warmer than expected, then you would imagine that the 30-year tonight is going to be perhaps a little bit problematic unless we get some real concessions built back in again. Back down into the 17 handle area. So if this comes in really hot, which is not forecast, then we would expect to obviously be selling lots and lots and lots of treasuries. But I don't see it at the moment. I don't see it in the curve. I don't see it in the relative value of the curves. And for that reason, I'm not, at the moment, I'm not really particularly bothered about what trade is on or not at the moment. 1:30, 10 minutes, guys, 10 minutes CPI. Watch your bond commercials as well on that one, just as a point. We always also have a lot of agriculturals coming out at 1:30. They've added that to this calendar. So lots of agriculturals coming out at 1:30 as well. So you can start watching those ones. You've got soya beans, you've got cotton, you've got pork, you've got wheat, you've got all sorts of stuff in there. And implied flow coming in from the natural gas storage numbers. Well, we know that. That's normal. 3:30, that's normal. And as we go forward, you can see that we get the exports and yield numbers from corn and all the various products as well, soya beans and wheat. And then, of course, the one that we're actually interested in ourselves is going to be the 30-year bond auction here. The 30-year bond auction now in there as well. And high yield, prior of 4.623. High yield of 4.623. That was the prior. Remember, what they do in the auction is they give you the when issued, and then they give you the high yield. That's what you calculate as your stop through or your tail. So if the high yield comes in above the when issued, that means that there was no demand and that therefore there should be a sell on bonds. If the high yield comes in below the when issued, that means that there was a demand auction and you should immediately buy bonds. Immediately buy bonds in that type of auction outcome. And you trade the bond to the buy side. The bigger the difference, the bigger the pop on bonds. The bigger the difference, the bigger the pop. So again, if you're paying attention to bonds, if you want to trade bonds, this is the most important to make sure you recognize what's happening here, because a good demand auction puts us into a state that we simply can ride for the next 24 hours. Or in this case, not the 24 hours, because we've obviously got CPI that's going to be a bigger driver if this comes in hot or cold. So next up, guys, CPI. And that's coming out at 1:30, which is just in 9 minutes. So we'll leave it on the screens for you during lunch here. And you can take a swatcheroo at it if you wish, and take a shot at the trade if you want to take a shot at the trade, or at least think about what you're going to be seeing if you see a hot number or a cold number in terms of dollar trades, in terms of equity trades. I'm not thinking it's the biggest equity trade because of the bigger macro fundamentals in the background, but it is a big bond trade and it is a big dollar trade. So if you're trading bonds or dollars, this is a very, very important print. It can have a big impact on equities as well. So just be careful if you're on equities, gold, on any of the other markets. Okay, I'll leave it on the screens. We are just a short while away from it. It's 1:22 at the moment. Outcome at 1:30, 8 minutes time, and then we'll get started, guys. Welcome in.